Hi, this is Jeffrey Cohen with Chicago Quantum, and I'm here to talk to you about the markets, week 12. So we've been on vacation this week, so it's been a little bit of catch up here, but that's okay. So first off, I'm Jeffrey Cohen. No video today, I apologize, but we're going to get right into the markets and the business. So again, who are we? We're Chicago Quantum. We're an IT management consultancy focused on quantum computing, focused on financial services, and with our first use case in stock portfolios, picking efficient or inefficient stock portfolios for clients and using a quantum algorithm. So let's get right into it. First and foremost, how we've been doing for the week. So I like to use FinViz. Thank you, FinViz, for use of the data. So over the week, you see that the best things in life are things that you buy with cash, commodities, lean hogs, lumber, ethanol, feeder cattle, so food products. Then you have natural gas up 3.5%. Oats, palladium. The S&P 500 is up 1.6, which is great. The Euro Stoxx 50, the DAX are up 1.4. The Dow is up, gas is up. All right, even the Nasdaq is up. So where are we down? We're down on the VIX. So our fear index is down. Cotton, silver, OJ, sugar, right? The Russell 2000 is down for the week. The Russell 2000 has been on a tear lately, so that makes sense. New Zealand dollar, wheat and cocoa. So you can see certain things are down, but they're not necessarily things that we all invest in other than, let's say, the Russell 2000. You're seeing a lot of commodities up, a lot of commodities down. Crude oil's down 1.17%, but again, you see natural gas is up 3.5%. So it's kind of mixed, kind of balanced. So let's take a look at the S&P 500. So the S&P, you're at 3,974. I believe I read this was an all-time high, 52-week high, or at least it's close. You can see 52-week range. It's been as high as 39.83, 39.84, and we're very close at 39.74. So let's take a look for the week. It looks like on Thursday in the morning we had a little bit of a scare. Markets dropped right from Wednesday. Wednesday afternoon you were at 39.36, dropped all the way down to 38.62 over about a half a day. And so it just is what it is. Looks like I've seen this movie before, though. Either Wednesdays or Thursdays look like they've been pretty bad for the market. There's a little bit of a push to the negative. If we take a look over the year, you can see that this market is healthy. It's attractive. It's going up over the year. You can see, just based on the fact that the year's been moving on, we're past the COVID crash, or almost past it. And you see some pretty much smooth sailing all the way up for the year. So we look like we're in a positive upward trend for the S&P 500. I've been studying the Dow theory, so looks like it's a long-term positive trend here, although without a lot of testing. Let's take a look at the Nasdaq. So the Nasdaq also fell on Thursday, but you can see that actually it never fully recovered. It looks like it really tried hard at the end of Friday, but Nasdaq's a little lower, and we're going to take a look at those stocks in a few minutes. We're going to try to figure out why. So Nasdaq is down for the week, although again a little sympathetic rise at the end of Friday. Thursday was a tough day, but if you take a look at the Nasdaq, it's up. Hard to tell whether it's still on an upward trend. This could be the beginning of something not so beautiful. But for the Nasdaq, we're at 13,139. And that compares to a 52-week high of 14,175. So we're off the 52-week highs. Let's take a look at the Russell. So small stocks, Russell, been on a tear, just dramatically on a tear. Let's take a look. High for the year has been 2360. We're at 2221. Close to the high, but not quite there. It looks like. Actually, it was probably last week or week before. Thursday again was a tough spot there for the market. Looks like it's coming back on Friday. If we take a look for the year, also it's pretty amazing. You were down at 1100. even under 1100 here, and Europe at 2200. So it's been a pretty healthy market for the Russell 2000. These are the small stocks, and I'm not sure why, but let's just take a look. So crude oil, May front month delivery. So you can see through the week it's been it's pretty interesting, right? So Monday looking good. Yeah. Tuesday in the evening looks like after hours was rough. All the way Tuesday in the afternoon. That may be tied to the Suez Canal incident, where we have a ship that is grounded in the Suez Canal, blocking it. The Egyptian government officials say that they want to be the ones to clear it. And who knows? Could take a day, could take a week, could take a month to clear the Suez Canal. And what I've read is that's 12% of European trade, or actually world trade, and it's the primary conduit from Asia to Europe. And so it probably doesn't affect the United States, Canada, North America, Mexico as much, but it definitely affects Europe because you're adding maybe a day or two going around the Cape of Good Hope. So it's not helpful for trade. So and maybe there's a crude factor here, especially if any crude goes through the Suez Canal, because now the crude has also got to go around. And but you see, nice solid recovery for crude on Wednesday, and then Thursday as well with a lot of volume. It came down to a low, looks like around 58, and pretty tough. So now we finished strong. Friday was a very sympathetic day. If we look again for the year, you see crude. It did dip in the post-COVID to about $16.94. You are up pretty materially, about 4 times for the year. So it's a healthy gain for crude oil. Let's take a look at how drilling does. So this is something that I look at, given that I'm long on SMLP. Still long, by the way. I always feel like I need to tell everyone that. But Baker Hughes does a weekly report on the rig count. So how many rigs do they have out there drilling, or does anyone have out there drilling? For the week ending March 26th, we have 417. That's up 6 for the week. It's down 311 from last year. And so what happened was with last year, when the price of oil came down, the rigs were the wells were unprofitable. And so why would you spend money to drill a new well when your old wells maybe aren't making so much money? So it's tricky, but at least we're up now. We're back up. We're up another 6. Again, Canada, unfortunately, down to 81, down another 11. So it's what, 1/9. It's a tough time in Canada to be drilling, so they're not drilling as much. That's it. Internationally, you see 24 more wells, being drilled, or rigs being used to drill wells. So looks like a slow recovery if you're in the pipeline business, and we'll talk more later. So gold. It's interesting. A lot of movement. Down, up, down, up. It's actually a lot of volatility there for gold as I see it. Finished the week strong. If we take a look at gold, you can see it was down in the 1600s. Low 1600s. It had gone as high as 2000 in August. I guess there were some fears, some worries. Yeah, we're back down to 1700 here. So, excuse me. So gold, little weak as I see it for the year, and pretty volatile for the week. So I'm not sure what's having an effect there. We're going to take a look at the euro. Euro looks a little weak here. Not sure why, but $1.18 on the euro. Euro weak, dollar strong. And you take a look at the 52-week range. It's right in the ballpark. It's been as low as $1.07. It's been high as $1.23.5. But I get nervous about that, right? So what's going on with the euro? So if we look at it for the month, we can see it's pretty low point. We look at it for the year, though. The euro has recovered since the pandemic started, but it looks like it's on a pretty gradual but pretty steep decline. So The dollar's stronger. Let's take a look at the treasuries. So for the week, where yields are down, which means bond prices are up. Bonds are stronger, healthier, right? So if we look for the, Monday they dropped, Tuesday they dropped, Wednesday they dropped. So yields were dropping, bond prices were recovering. We're back into Friday, and it's just always interesting when you see this kind of a curve, because normally it's a pretty straight line, and now it looks like Friday really a jagged edge here. So yields came up, came down, came up again. So maybe people were turning risk on, deciding to pour money in the market. As you saw, Friday afternoon market was very strong, and so getting out of bonds so they can spend the weekend invested in stocks. At least it's a hypothesis. So when we look at the yields for a year, you can see it, right? Post-pandemic, they were down, reached a low of 0.536. Actually, it looks like it's a 0.50. You had a high of 175, which looks like it was last week. And so we're still pretty high, but 166 is a lot less worrisome, I think. Bitcoin. Always pretty crazy, always pretty hectic. A lot of volatility. You can see on Thursday, Bitcoin dropped to 51. So as the market dropped, Bitcoin dropped. But as the market came up on Friday, let's take a look into market right there. Yeah, it looks looking pretty healthy there. And over the weekend's been up. So for some reason, something's picking up Bitcoin over the weekend. The Nikkei, an index I like to look at, the Japanese stocks. Tough on Wednesday, was down into Thursday, and then recovered into Friday. And so same kind of thing here globally. We'll see if the FTSE, which is the UK, see what they look like. Again, it's a very, very weak Thursday. Again, maybe it's Suez Canal, maybe there was some other news. Again, I was on vacation in the mountains with no access, so I don't know. Let's take a look at the S&P 500 by industry. And you can see for the week, 1 week performance, largely green. Got a couple of the high flyers. Freeport, McMoran, right? Basic material, mining company is down. Nike's down. Tesla's down. Ford, General Motors, so auto is down. Facebook is down. Twitter's down quite a bit. But pretty much the rest of the market's up. Maybe a little bit of banking here. I don't even know who SIVB is. SVB Financial Group down 10%. That must be specific. And then you see Goldman Sachs, Morgan Stanley are both down. So again, probably firm specific issues. Let's take a look. So that's over the week. Let's take a look at the world for the week, and you can see South America pretty much all red. Caymans are red. China's completely red for the most part, except for maybe Burning Rock Biotech up 4%, and Huaneng Power International. But for the most part, it's down. Japan down for the week, although we didn't really see it in the indices. South Africa down. So pretty decidedly mixed. Europe looks like it came back. Maybe things with the pandemic are doing better. But look at Germany. Germany's pretty much all red, and so I'm not sure. Pretty weak globally. Let's take a look at bonds. I love the yield curve. So Treasury yield curve. U.S. Treasuries are considered to be risk-free. If you want to put your money away, you want to lend it to the government, U.S. government, for a month, you're going to get 2 basis points. 3 months, 2 basis points. 6 months, 4 basis points. For 2 years, 14 basis points, or 0.14% interest rate. That is not exciting, especially for on the retail side. You'd like to see if you can earn more, especially if inflation's running at 2%. Then this means that you're earning almost negative 2% on your money, as long as you lend it. And the 10-year, you can see it's down, actually. 1.67, we saw 1.66 in Yahoo Finance. So there's your 10-year. It's up from last year, but it's not terrible at 1.67. And then the 30-year at 2.37. Again, you can see from last year at this time, right? Last year the yield curve had really flattened. Now it looks like we're seeing some of that risk premium in the long term coming up. But again, always compare this to a 2% inflation target. I'm assuming we're at 2% or we're getting close. And so here's where we are. And so just important to think, as the yield curve steepens, that changes our risk appetite. To me, that looks like it's more of a healthy economy when you see a steeper yield curve. I never like to see a flat yield curve or an inverted yield curve. But again, I'm really surprised. We're at pretty much zero. If you want to have the government hold your money risk-free, you're not quite paying them, although you are paying them the inflation, 2%, to hold your money. You're almost paying them nominally to hold your money as well. Let's talk about SMLP. So we are in the same position we were before. We were holding March calls, and those March calls have expired worthless, so we didn't make it. And it's unfortunate because it sure looked like we had a chance earlier in the month as the stock hit $29, and it looks like it drew a line right around $29. It was down on the 16th, but pretty much within 5% easily for that whole period. And SMLP has been dropping. So you might ask, why is that? I have my own hypothesis. Again, right, we're not changing our position, but if you take a look at the moving average, the MACD, and we take a look at whether there's accumulation or distribution, it looks like what I'm gonna do is just look at it for the week, and we can see a lot of distribution, a lot of selling of stocks, and so the supply of stocks is higher than the demand of stocks right now, which of course is driving the price down. Even at the beginning of the week, you were up $26. You ended at $24.50. The RSI relative strength has been. It looks like it's been a couple times over 50%, but maybe 65 at the high. But it's pretty much been down. It's been down. It's not been an attractive stock. It's been a weak stock. If I look at my accumulation or distribution, it's interesting was on the 24th we were still accumulating, but then we've come down. We're distributing stocks. There's too much supply in the market right now, and I have again some hypotheses. And if you look at momentum, this thing has been a later in the week at least been a real negative drag. So what's going on with SMLP? Maybe we need to look at a month. You take a look, it was down at 21. It's really come up almost 29, and then all of a sudden we're back down to 24.50. Mr. Cohen, right? What happened here? So what happened is that they issued a challenge to the preferred holders. If you'd like to turn in your preferred stock, which is $1,000 a share, at 9.5% interest rate, with some accumulated distributions that hadn't been paid, maybe $150, $160, $170 worth, we'll give you some stock for it. And so $1,000, call it another, $150, that's $1,150, par value. And for that you get 27 shares. That was the original offer. They raised the offer to 30 shares. So here's the thing, right? No one looks at those preferreds that aren't paying interest and aren't getting distributions at 100% on the dollar. But you could take a look, and let me see if I've got this saved up. Yeah, you take a look. I'm going to blow this up a little bit. And your SMLP bonds, so corporate bond, 9.5%. This is your preferred. It's trading at 65.5, so that's $655. So if you take $655, let's say you have the preferred, or not. Let's say you don't have the preferred and you just want to buy it, right? So let me get my calculator out. It's pretty handy here. $655. We're going to divide that by 30 shares. So doesn't look right. Hang on. $655 divided by 30 shares. You're at $21.83. So anytime anybody wants they could buy the preferred, and they're basically, I think it's April 15th or something like that when you got to turn it in, 2188, 2183. And so at 2448, I mean, this is found money right here, right? I might as well buy the preferreds and sell this stuff short. In fact, if I'm smart, I would have sold it short right away, right? So again, this is the way you compare it, right? I've got, before there was a preferred trade in, this thing was 29 bucks. It looks like it was going through the roof, going to the moon. This tree was going to grow all the way to the sky. I was so happy. No, I'm not as happy anymore, because now that SMLP issued a preferred challenge, or a prospectus to swap preferred for common, and made it attractive at 30 shares apiece, right, this 2448 is not sustainable. You're talking about if $80 million is turned in of par value, or 80,000 shares at $1,000 a share par, you're looking at 2.4 million shares being deployed. It's a lot of shares. Let's talk about that, right? If I can buy preferred and I can short this stock, I could be guaranteed to make it a profit at anything over about $22 a share. Because that's just how it is, right? But the stock is so thinly traded. Look at that. What is the volume on this thing? Let's see if I can read the volumes. Let me get rid of some of the indicators. See if I can read it. 2.4 million shares could be released, and really what we're looking at here is, wish I could read it. That looks like trying to find the volume. Just stop showing up on my chart here. Yeah, I want to see the volume. Looks like we had plenty of volume here. On the 19th, it was about 190. I just remember 190,000 shares. You're looking at about 50,000 shares. Volume on this thing on Friday was 53,000. And so the challenge you have is, if anyone really decides to short this thing, take a look at that. Somebody in an hour decided to do 49,082 shares, so 50,000 shares, and they drove the price down pretty dramatically there. So that's just how it works, right? The stock is pretty thin. And so you got 2.4 million, up to 2.4 million shares being introduced. You got people who could buy the preferreds right now. See, I can't buy the preferreds. I trade through a retail broker that doesn't allow me to buy bonds. But anyone can buy preferreds. And if we take a look, it's got a cusp number. It's a real thing, right? So you could have bought this thing as low as $1.50. Can you imagine? You pay $1.50, you get 30 shares. That's crazy. Even if you paid 7, 10, 20, 30, still made money. I actually thought this thing was a steal at about $45, which would have been $450, which means I would have been getting the common at $15 a share, which is terrific, right? Once the offer came out, the thing shot up to right about 60, and it's been floating above 60 ever since. So this is tricky, right? You don't know what's going to happen when a company decides to pay off their debt. I was kind of hoping that they'd make a lot of money and they would just pay off their debt, but in this case, they're going to be selling common, and I guess it's fine, right? I still want them to pay off their debt. And if we take a look at some of the other bonds, you can see that their August 2022s are trading at $99 plus. So 99 out of 100. That's 990 something dollars per bond. So there's no question. And look at the S&P rating of triple C plus. This is a dog, and yet this is a dog that's fully priced at a 5.5% bond. And so they're going to pay those off. They are. They're either going to restructure or they're going to just keep paying them off. If we take a look at what they're trading at, you can see they've been trading at 99, 98, 97, 96.5, 96.9, 97, right, all week. And so not a lot though. $5,000, $250,000. So normally I would see some $1 million trades here. No, looks like not a lot of $1 million trades. Not a lot of big trades at all. These are just probably more or less retail bond trades. You see 100 grand there. And there's ways to read this. There you go. $1 million on the 11th of March. $1 million on the 12th of March. So it's possible that this is either the company or somebody accumulating some of the debt position. Here's $1 million. Here's $1 million plus. Here's $1 million plus. Here's $500,000. And so somebody buying back the debt, let's say at 98 and a quarter, talking a 2% discount. It's pretty reasonable, but nothing since then. So it looks like now the action is in the preferreds, and unfortunately, it's driving down the common. And so, personally, I still like the stock. I still like the value play for the common unit holders, but it's you have to remember why you like the stock in this case. The short sellers are going to not make this so easy for you. And so that's really where we are. I just wanted to talk a little bit and fill you in for the week. We're running a run this weekend, and so we're going to be taking a look at the markets. We've got a paying customer this weekend. Thank you, by the way, if you're out there listening. And just to take you back, I'd like to ask you if you enjoy the discussion. One of the things you can do right away is you can subscribe to the YouTube channel. That'd be terrific. You get a notification so you don't miss when we come on. Today we're coming on Saturday. The other thing you can do is you can sign up for our newsletter, which is great. You can see Jeffrey at quantum-usaci.com. Subscribe to the newsletter. Boom, you plug it in, you hit subscribe, you're done. You can also contact us. Here's our main office, my cell. You can email me. You can connect through LinkedIn. It's a good team. You can also just go ahead and buy an analysis. This is long. This is short. So you can buy a long, you can buy a short, or you can pay us $7,500 a week per person, and we will code your model, and you'll own the model. Or just give a call for $100 for 30 minutes. We can talk you through all the math, all the work, how it really runs. You can also buy a project. And so just wanted to share with you what we're doing, where we're at, and if you like, you can also follow us on our blogs. We're very much about posting the content that we learn, and our blogs are not advertisements. Our blogs are actually blogs. So thank you very much. Take care. Hope you have a great week. Good luck out there. Bye-bye.